This is Friday Night Forex and Chill. We're just going to be hanging out talking about Forex, and we're going to get started in about 4 minutes. We usually don't rush things on Friday night. It's a casual, laid-back environment. This might be my Uber Eats. Give me 1 second. All right, guys, I am back. I am now the official owner of an Oreo milkshake and a CEO burger. So I'm gonna go ahead and get started. Let me check out the chat here. Hi, Toy. Thank you for joining us. Let me tell you guys a little bit about Forex and Chill. I started my Forex education with iMarkets Live. And if you're not familiar with iMarkets Live, it's an online education where they have educators from all over the world in different languages that are teaching their skill sets to thousands of people weekly. And our special guest tonight is going to be this gentleman over here on the right, Marios Kouloumbris. The way I met Marios was a year ago in September. I was a part of a group hangout on a Saturday morning where we would look at charts and talk about Forex, and he came on that morning to teach and to tell his story. Well, Marios at the time was only 22 years old, and he had studied under this gentleman here. I'm going to pull his picture up. Marios had learned and taken study under Stevenson Lindor, who's the top IML educator teaching Forex. Well, after studying under Lindor, this 22-year-old was able to leave college and begin trading full-time. He had flipped $2,000 to $12,000 in a month, and he had fallen in love with the skill set of Forex, and he knew that this is what he wanted to do with the rest of his life. Well, fast forward a year later, he is now a top educator on IML himself. So at the age of 22, he was able to retire and leave college to trade Forex. And at the age of 23, he is now an educator alongside of the gentleman, Stevenson Lindor, who changed his life. I think some of you are on here tonight, guests of Stevenson Lindor. So this guy really owes a lot of thanks and a lot of credit to Stevenson. He's a really good friend. I was very impressed when I saw him that Saturday morning, and just hearing his testimony is what inspired me to really buckle down and get serious with this. And I see Jamie here from Saudi Arabia tonight. Thank you for joining in. Karen, hello. Stephanie from Santa Barbara. And Alea, don't be jealous. This Oreo milkshake really isn't that good. Wink, wink. I just want to tell you how good it is. But we're going to have Marios on in a few minutes. He's calling in from Greece. So for those of you new to the platform, I like to bring on experienced traders who started where we are now and who were able to climb the ladders of success and retire themselves, retire people in their family, and just change their life dramatically with their Forex success stories. And so after hearing Marios and hearing his story of how he would chart so many hours per week and he only traded certain days of the week and how disciplined he was, I'm like, well, let me start a hangout because I need to surround myself with people who want the same thing I want. And at the time, I wanted to retire to trade full time. Well, that was in September. I got very serious with my studies. Fast forward December 31st of that same year, which was last year, I left my government job. I was working for the U.S. military, the Department of Defense. I had worked in Afghanistan and Kuwait, and I had become efficient and proficient enough with my Forex that I was able to leave work. So now I made Forex and Chill a passion, just hanging out with other traders and teaching people, giving them a free platform and giving them enough knowledge to get them started. You know, a lot of people, they don't want to share that knowledge, but I believe in sharing knowledge and empowering other people. So I thank you all for being here tonight. And Grant, I know you're there. If you see Marios, come on, let me know. So when he does, I can turn this over to him. And I'm going to talk a little bit about, for some of you experienced traders, I've been looking at this platform. I know we all use TradingView, to markup. So I'm going to tell you the difference in the two platforms while we'll wait for our guest to come on. All right, most of the people I know use either MT4 or TradingView to mark up. And yes, this is a pair that I did trade this week, and I caught this sell from the top. So this is one of the reasons I was able to make a withdrawal from my Forex account today to pay off some bills. But the difference in these platforms is TradingView is internationally known and used. It's a very good platform. People love it. It has a lot of capabilities. But the one thing that it's missing is that we as traders are not able to connect our live brokerage account. So sometimes, you know, and I'm going to give you this as a warning if you're using TradingView, whenever you're setting your take profits and your stop losses, please use the price that is on your MT4 connected to your broker, because those few pips difference could really affect your trade and getting kicked out of your stop loss, especially with these spikes that happen. You could be 2 or 3 pips different than the broker that you're using here on TradingView. So whenever you're making your stop losses or your take profits or your entries, even though this is a wonderful trading platform to mark up our charts, a charting platform, always look at your MT4 when you are setting your take profits and your stop loss, because those 2 to 3 pips could make a big difference in you winning or losing a trade or getting stopped out. And the platform that I'm comparing it to, I've been taking a look at Smart Trader, and it is from an online education institute. The one thing that I do like about them is that I can connect my live broker. I disconnected it tonight so people wouldn't see how much money I have in my account because we can't make income claims. But you can connect your actual broker, no matter who your broker is. Like I'm FX Choice, and I was able to connect it. And it's like having TradingView and MetaTrader 4 connected together. The one thing they're missing that I do prefer, let's see, Euro NZD, let's bring that back up. I can use Rincos on TradingView, but they don't have Rincos yet on the Smart Trader. That's the only thing missing. So if you don't use Rincos, this is a really good platform. They have some smart tools that will draw like the smart Fibonacci. If you don't know how to draw Fibonacci, you can click on that. And I'm not getting paid for this. They don't even know I'm showing this. And it draws your Fibonacci on there for you. For those who don't know how to draw the fib, they have different price levels, just like TradingView does. You can draw a smart trend line by just clicking there, and it'll put a trend line for you if I do it right. But it has different features. It'll give you support and resistance. But like I said, the one thing that I do like about it is it will allow me to hook up my broker and trade from my broker, which will get rid of that problem that we experience by setting our stop loss and take profit using TradingView. So just remember, if you're using TradingView to chart an MT4 to place your trades, always make sure you set your stop loss and your take profit by the numbers you see on your MetaTrader 4, because there could be a 3 to 5 pip difference, especially if you're using the Oanda broker here. Whenever I do my charts, I have found that you see here you have all these different brokers to choose from. I always use FXCM because Oanda is an American broker and they have a much wider spread than the overseas broker. I'm being told that Marios is on, our special guest tonight. Marios, are you here?
Yeah. What's up? How are you?
Hey, Marios. Let me give you another proper introduction. I introduced you before you came on, but everybody, we are now live with Marios Kouloumbris. Am I pronouncing
Yeah.
your name right?
Yes.
Awesome. He's from Greece. He started trading at the age of 22, was able to retire within 2 months, and now he is an IML educator a year later. and he teaches in Greek and he also teaches in English. On Sunday, he gives us an outlook for the market and he gives us trades to look for, to take those setups throughout the remainder of the week. And he's very, very good at what he does. So good that he retired himself, and people who are following him are making a lot of money. So I'm going to stop sharing my screen and turn it over to Mario's and mute myself out and enjoy this nice Oreo milkshake. Thank you, Mario.
Perfect, perfect. So how are you guys? Okay, so I hope everyone is good. I hope everyone had a very nice and profitable week. Okay, if you guys can see my screen, let me know in the chat. Okay. Okay, so yes, Gigi, can you make me host because I can't annotate?
Paris, are you there? Are you able to make Mario's host for me?
Okay. Okay, perfect.
All right, you are now a host. You know how you got me? I was typing in your name, Marios, and we have another Marios on tonight. And I'm like, that's not him. You snuck in with that tricky name tonight. No,
Yeah, KK. It's my ghost name, you know. So let me find how I can annotate though. Where is the annotate? I can't find the annotate. I don't know why.
I think this is the same platform that we were using the last time, and I'm not accustomed to this one. I think the last time you just drew on the screen.
Yes, last time that I joined ForexNChill, again, I couldn't find annotate, but in my Zoom, I can find annotate, so I don't know why here I don't have any annotate. So I can't draw on the screen. So I have post share, new share, put that in, video, mute, remote control, what is this? No, it's not this. Okay, so stop.
Let me see if I can find annotation. I never annotate on the screen.
Yes, I'm doing this because it's more easier for people to, you know, understand the patterns. So I have a tool. I can use the tool that I have, but yes, this tool is very weird. So it can take me, you know, some time for me to use it. Okay.
It's okay. And I would like to just tell the new people here, Marios is teaching advanced. When I teach the basics. So this may look a little Greek to you, no pun intended, since he does speak Greek. But just if you have any questions, you can ask questions at the end of his session.
Okay, so I need to stop sharing and share again my other screen because they don't let me to put this tool on this screen. So give me 2 minutes, guys. Okay. Okay, so now I share my other screen. So yes, so probably guys, where is the? Yeah, this tool is so annoying. Okay, guys, this is the tool. Okay, don't buy this tool, guys. Okay, it's not good. So let's start. Okay, guys, today. Yes, just let me know again if you guys can see clear my screen. I can't put it full screen because the tool is going to disappear. Okay, so yes, I can't do the full screen. So today, guys, we are going to do something different. Okay, so we are going to talk, okay, about correlations. Okay, I know a lot of people are struggling with identify what is going on in the market, if news are going to hit, what is going to happen, if critical news are going to hit, what is safe havens, and blah 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 blah. Okay, so I will try and break it down. Okay, what is safe haven, how people react when we have different things in the market. I will show some examples how pairs are correlate together. Okay, and then I will go in the market, find 1-2 setups that I would look for the next week. Okay, I didn't make any markups yet. I didn't see the market yet, but I'm watching the market every day. So, but I didn't spend time on the weekend because now it's a weekend in the market. So I will just show you guys 2 pairs that I have my eyes on, and that's it. Okay, so I will start with correlation. Guys, any questions, please let me know in the chat. Okay, I will open the chat also. Okay, so let's start. Okay, so first of all, in the market we have currencies. Okay, guys, so we have CHF, we have NZD, AUD, JPY, USD, Euro, GBP, whatever. Okay, so we have a lot of currencies. When things are getting bad in the market, so pressure is coming in the market, for example, US-China trade war that's happening now, for example, Brexit that will happen in 1 month or 2 months or whatever. Okay, 31st of October, it can happen faster. Okay, so Brexit is right in the corner. So when these things are coming into the market, okay, people will put their money into safe havens. Okay, can someone tell me, if you know what are the safe havens, what currencies would call safe havens? Please type me in the chat. So let's see if you guys okay, gold, yen, gold. Okay, silver, CHF, gold and silver, JPY, platinum, Bitcoin. Okay, Bitcoin is not a safe haven. Okay, metals, yeah. Okay, so yes, most of you guys get it correct. Okay, so safe havens are, okay, why let me know. Oh, this tool is not good, guys. Yes, let me open a new. Okay, so I will write with the pen on TradingView. Okay, so safe havens, okay, are CHF. Okay, when we have bad things into the market, CHF as a currency is going to go up. Okay, then we have JPY. Okay, guys, sorry about the letters. Okay, yeah, so then we have JPY. Okay, when things are bad, JPY is going to go up. Then we have metals. What I mean by metals, okay, metals are gold, silver, and this. Okay, so we have metals. Okay, metals are going to go up. Okay, so this is our safe havens. Okay, so when we have problem into the market, CHF is going to go up, JPY is going to go up, metals are going to go up. When these 3 currencies are going up, which currency is going to go down? Tell me in the chat. Let's see who knows. Okay, so A and D. Okay, A and D. One of you guys type A and D. A very nice job. Okay, very nice job. So when we have when these are going up, A and D is going down. Okay, and when A and D is going to go down, okay, N and D probably is going to follow. Okay, N and D probably is going to follow. Okay, down also. Not as aggressive as A and D, but it will follow. Okay, so what about the indices? By indices, I mean US 30, S&P 500, NASDAQ. What about this? What do you guys think indices are going to do when yen is going up strong and CHF and metals? Very nice, okay? So US 30 indices, okay? So I will just type US 30, okay? Because I know a lot of people trading this. So it will go down also, okay? And keep something in your mind, guys. Equity market, which is indices, okay, is going down fast, okay, and strong. Is going up correctively, but the big picture is up. So when you see problem, equity market is going to boom, crash. A lot of billions will get out of the market, but it will recover, not as fast as it went down, but it will recover more than the impulse generation point that caused the drop. Okay, so equity market will do something like this. Okay, fast drop, slow up move, but it's going down. Same thing with gold. Okay, gold is going up strong, it's going down not as strong as it's going up. Okay, so this is about the safe havens and how people are reacting when things are getting problems. So now I'm going to tell me, Marius, you didn't put GBP, you didn't put USD. Okay, so USD and GBP depends. Okay, guys, sometimes people, they would not even care about GBP, especially now with all of this Brexit thing. Okay, if Brexit is going to be bad, okay, and GBP is going to crash, okay, gold is going to go up, JPY is going to go up, CHF is going to go up, okay, USD is going to go up also, okay. So it will go against the GBP because investors will throw money inside. Okay, it depends in the problem we have in the market. Okay, so now we face Brexit and US-China trade war. Okay, so it depends on the problem. Okay, is that, yes, the last one is US 30. Okay, so let's now, okay, let me delete all of this. Let's now go and see some examples. Okay, so let me put the daily chart. Okay, so we'll close the chart. So let's go back when it was Brexit. Okay, it is going down when metals go up and it's indeed to go down. Okay, so let's go back to Brexit. Okay, this was Brexit, guys. Okay, so market drop aggressively. If I go to all of GBP's pairs, which I'm only going to go in one, just okay. Every GBP pair follow that day. So if I go back, okay, as you guys can see my screen, okay, this dot here with this is the same. Okay, every GBP pair follow. Okay, so we have the same movement in everything because that day people get out their money from pound. Okay, so pound crashed. Okay, so everything that has pound in front, okay, it went down. Euro pound, it went up. Okay, let's find it. Boom, here. Okay, it went up. So let's go on DXY, which is in dollar. Okay, 2016. Boom. Okay, so DXY, okay, went up. If DXY went up, okay, that means gold, that means everything that has DXY on the right side, so Euro USD, GBP USD, blah, 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 they went down. So gold should go down, okay? If I test Euro USD, okay, Euro USD that day went indeed down. So let's go back again. It was here, okay? So as you guys can see, that day Euro USD went down, okay? Not as aggressive as the pound, of course, okay? This move was a 400 pip move, and this move here was 1.7k pip move, okay, guys? This is normal, okay? But with this logic, that means gold should go down, okay? But gold that day went up because gold is not following, okay, the here, okay, gold went up. That's a candle, okay, because gold will follow. It was a 1000 pip move, okay? So gold will follow the dollar, okay? But when we have a lot of pressure in the market, gold is going to do what it's going to do, okay? It's going to go up, okay? Whatever dollar is doing is going down or up, whatever, okay? Gold has only one way, up, okay? And if you guys, I don't know if some of you maybe are new, okay? I don't know, but if you guys are following me for the beginning, okay? If you remember, I was telling you guys from here in these areas, buying gold, buying gold, buying gold. Gold is a long-term buy, buying gold here, buying gold here, buying gold, okay? And gold is going up because gold, yes, it's going to correct, okay? I agree. If we have a recession, okay, gold is going to go more up, okay? But if we don't have any recession, this can correct down. But I don't see gold testing again this number, okay, guys? If gold is going to test again these numbers, things are going to be very good for us, because people that don't have any positions, this is your gift to open a position, okay? I'm not talking about matching position with leverage, okay? I'm talking about invest, okay? Because with silver, it was silver happened the same thing, okay? Gold and silver are moving together. Maybe gold is going up and silver will stay, but at the end, silver is going to follow, okay? Again, silver, I was talking about buying these areas, okay? Again, not with matching, okay? Some people can afford matching calls here, okay? Leverage buys here, because market can spike down and blow your account if you don't have enough capital. But you have capital to buy physical. This is what I'm talking about, okay? And it can give you a good return in the next couple of years, okay? So again, if I go and check this on 2016, okay, boom, here it is, okay, this big candle here, okay, went up, boom, okay, create the high, the $21 per ounce, and then market drop again, okay? So this is how market, as you guys can see, affect. So if, let's go on some CHF pairs, let me think. So USD went, okay, so let's go on CHF. Actually, yes, I can see this. Okay, so USD CHF most probably follow the USD that day, not the CHF. Okay, so yes, just keep your eyes, guys, on when we have uncertainty, money on yen. Gold follows yen. Okay, yes, it has USD, and most people out there, they will tell you, no, gold is following USD. But when we have uncertainty, gold is going to follow the yen as a safe haven. Okay, keep that in mind when you are trading gold for a sell. Okay, when things are good and calm, yes, sell the gold. Okay, but big picture on gold from, yes, you know, guys, from big picture. Okay, it's an uptrend. Boom. Okay, we have our downs in the price. We have our downs in the price. Okay, but price eventually is going higher. Yes, this is not the very good. Okay, if you see gold scaling up and up and up, it's not very good on the economy, of course. Okay, but things are going to change, and they will, you know, put everything in order, because when gold was there and it's going up, everyone was like, oh, it's not good for the economy. Now gold is trading at 1.5k per ounce and everything is good. Okay, so people are just going to talk and talk and talk to do this type of things in the market, okay, which this can happen here also. I'm not telling, but every time gold is hitting low, okay, it's good opportunity for us. If gold is going to hit again these areas, okay, no one knows. I don't see these guys. Okay, when gold was there, everyone was telling, oh, gold can't test again this. Okay, if you guys see again gold at $200 per ounce, probably it's the end of the world or something. Okay, or we have a new source of precious metals or something, I don't know. Okay, so that's about the safe havens, guys. Things are very easy. Okay, I don't want to put a lot of noise in your head about, oh, safe havens, and let me, okay, just keep things simple. Write this down, put it on your wall. In case of uncertainty, check them out. How you check them out? You go, let's say we have JPY getting strong. You go and check all of JPYs, INJ, GINJ, UJ, NJ, ANJ, everything. Okay, so everything will follow. They will do the same move, not as aggressive, all of them. So maybe one of them can give you 200, other one 150. It depends on the other currency too, but you will see the spike up or down in everything. Okay, so just keep in mind, this is how we check things. Okay, again, when we have uncertainty at the 3rd of January this year, okay, yen let me put only one chart. So yen get strong. If you guys remember on 3rd of January this here, okay, this move here, okay, so this move was 200, and then market crash 500 pips. Okay, if you check AUD, this was a move here. Okay, went down also. Okay, so now the reason that the AUDs keep going lower and lower and lower is because things are not clear with US and China. Okay, if things are going to get clear and people are talking about having a good and normal conversation, and they will find things out without any, you know, crazy things, this is calm into the market. Calm means JPY will drop, CHF will drop, AUD will rise, NZD probably will rise. Okay, metals are going to go down, stability is going to come. If things are not going to be good, probably recession is going to come, because we can't see metals and JPY going up and up and up and up. Okay, this is not good. Okay, guys, and when recession is going to hit, probably you guys are going to understand it. Okay, it's not going to hit in a day. It will take some long time, but you guys are going to understand it. Okay, so someone says coming. Okay, you don't know this. Okay, you don't know this yet. Okay, if things are going to be good, recession is not going to come. So because you told me it's coming, okay, what is going to happen in the equity market if recession is going to come? Tell me in the chat. The one that told is coming, okay? So what is happening to the equity market if recession is hitting? What will happen? Self-paid cam. Tell me. What? So equity market will go up or down? Okay, down. Okay, so what Trump wants? What President Trump wants? Okay. Yes, he wants a weak dollar. Yes, he wants the equity market to go up. Okay, so Trump wants the equity market to go up. Okay, so the reason that he wants this is because he thinks that maybe he's going to win the election. I'm not from US, okay, I don't know, but what I'm watching in the news that Trump wants the equity market to go up in order to win the election that will happen in 2020, okay? If equity market is going to go down, if recession is going to come, Trump will not win the election, and Trump wants to win the election. Okay, so that's why everything now is coming to, oh, let's talk with China, let's find a solution with China, everything is going to be good with China, okay, to calm things down. I'm not telling you, okay, I can see here, I can see a flag too, this can go down. Either way, I will make money, okay? I don't care if Trump is going to win the election or something. I'm just giving you an opinion, what Trump wants, okay? So, and yes, this guy is moving the market with a tweet, okay? So, if he wants equity market to go up, most probably equity market is going to go up, okay? So, yes, I can see the flag here. It was similar move. Let me find on your set is more clear with this one here. Okay, this here with this here. Okay, so maybe this can drop. Okay, but eventually this is going to go up. Okay, every time this is going down, it's going up, going down, going up. Okay, here was the recession on 2008. Boom, here. Okay, this happened. Okay, this drop, it was 52% drop. Okay, so if you have the same thing here, okay, this will just create new low here. Okay, and that's it, it will go up again. So yes, this can bring a lot of uncertainty, a lot of trillions out of the market, but yes, let's see what will happen. Okay, either way we will react into the market. Just keep your positions open. Okay, don't, guys, please mute yourself. Okay, so guys, just keep your positions open, okay? That both things can happen. Don't be surprised if this just spike up. Don't be surprised, okay? Okay, yes, Grant, okay? I know that Trump wants a win dollar too, but I know that he wants more equity market to go up, okay? Okay, so yes, guys, let's go and see also two pairs that I'm looking for this week, okay? And we are done. I hope everyone understands about correlations and how we react. Oh. Okay, how we react. Okay, so let's check euro and dollar. Okay, so euro and dollar broke today, the structure very strong. Okay, so broke the previous low, very strong. So now we are going to react into the market. Okay, so if we get a correction here, okay, so if we get a correction here, if someone
Hey,
wants to,
Mario, share your screen again. Oh, you
oh,
stopped
what?
sharing.
Oh, I stop share.
See, you're trying to drop the sauce and not let us see.
So let
Hey,
me.
listening to this makes me wish that I had paid attention in economics class.
Yeah, let me share again. Okay, perfect. Okay, so guys, euro and dollar. Okay, just keep an eye. If you guys see a flag formation here, look for this to go down. Okay, be careful on this move though. Okay, just be careful. Okay, and for the traders that are looking to go for the correction, you can, of course you can, just keep an eye on lower time frame. Okay, 15 minutes, 5 minutes. This can correct and go higher. Okay, similar thing happened a few months ago. I was trading euro dollar back then also. So let's go back and see. Okay, so guys, something you guys need to understand is always remember, okay, what is happening to the market. Let's go back. Okay, it was on market. I need to go there. Let's go on 1 hour. Okay, so it was here. Okay, so again, similar movement, price went aggressively down. Okay, so if you see price corrective, give it a shot. Okay, first target, okay, it will be your impulse generation point here, this area here. Okay, if you see price scaling up, follow the market. Okay, put on break even and react. If you see price struggles here, of course, cut off your trade. Okay, but if you're going to wait for correction to sell, be careful because market already it's at very, very low points. Okay, just be careful. And another pair that I will have my eyes on is this one. Okay, I already entered this one twice this week. I made some money, and today I was sleeping that time, unfortunately. Okay, and I lose the drop now that it's sharp. Okay, so let's hope it's going to give a retest back here. I don't think so, but yes, anyway, let's see how we trade this now. Okay, so the reason that I took this trade is obvious, guys. Okay, obvious. So now wait for this to correct and drive this at least at this point. Okay, so keep your eyes, guys. Okay, keep your eyes on euro. Okay, in the scenario that euro is going to get weak, this is better opportunity than euro USD, of course. Okay, so these are two pairs that I would look, and actually I was looking for the week. And yes, if you guys, because we will have US and China news this week on September 1st. Okay, actually, yes, now okay, September, October, November, guys, and the 2 weeks of December are going to be critical. Okay, and September is going to come. Maybe you can see spikes in the market. Use stop loss. Okay, and don't over risk, especially don't over risk, because some of you maybe are new. Okay, just for your notice. Okay, if you are over trading and over risking, over leverage, okay, and you put a stop loss and you have a spike, not in your way. If it's only in your way, good job, you will make good money. But if it's not, you will blow the whole account and maybe go on negative balance, because market is going to stop. Think about market is going to disappear from here and appear here. So stop loss here is not valid. It's not there. So market will stop you out when it's time for market to calm. Okay, so yes, don't over leverage when we have uncertainty around the corner. The only thing that you are going to win is losing your money, so no wins. Okay, if you are lucky, you can make a lot of money, but don't play with your luck, especially if you are building an account for a very long time. Okay, if you're going to throw 5,000-10,000 and risk it all, do it. But if you are building an account, it's very, very bad emotionally to lose it in a trade. Okay, so yes, but in case that we have everything is good, watch this to rise. Yen pairs to rise. Okay, AUD pairs, AUD USD to rise, Euro USD to go down, Euro USD to go down. Okay, that's it. So any question, guys, before I stop sharing?
If anybody has any question, you can unmute yourself and ask a question. Morris, make sure before you get off that you make me host again so it doesn't disconnect me.
Yes, yes, okay. So I will make you host now, actually.
I'm glad you covered this because I had started looking at correlating pairs this week myself. I can tell that you were my mentor because I caught that Euro NZD sell.
I caught that on Monday. I caught that on Wednesday. Okay, and I fall asleep today. So I made some money on Monday. I hit break even. I made some money on Wednesday. I hit break even, and I fall asleep today, and market drop. And the good thing is positive swap on this pair. So I will make money during the weekend also. Yeah. Just holding.
And I had covered this one last night with the team, and was telling them I was selling it.
Yeah, just when it's going to break the trend line, keep an eye on the bigger pattern. Okay, that's it.
Yeah, gotcha. Because I know we could see it come down to here.
Yes. Okay.
All right, does anybody have any questions? You don't have to be quiet. You can unmute and ask questions, guys.
Yes,
this is Friday Night ForexNChill. We're very informal.
Hello, Gigi.
You have a question?
When is the next ForexNChill?
Next Friday night.
Okay, so Leonard, you raised your hand, man. What? Just type me your question.
Gigi?
Yes, you can ask a question.
Yeah, I'm seeing on your screen right now, you have this thing called ICE. The extension is continuation or?
Yes, I was telling my team last night that the old school traders, before us younger people, I'm not younger, but you know, before Forex became as popular as it is now, they called it impulse correction extension. And that's what we call the continuation. So a good way to remember it is ICE, impulse correction extension. That's all that is. It's the same thing.
Can we get Marius to mark up a chart?
Marius, will you mark up a chart?
Okay, let me mark up a chart.
I'm gonna stop sharing. All right.
Okay, so let me
yeah,
see.
Marius is the king of patterns. Those patterns are really changed my my trading. Those patterns had a lot to do with changing my win ratio. I started winning a lot more trades after Marius taught me patterns.
Okay, so let's mark up a chart, guys. Okay, guys, I will do this in like like 1 minute. Okay, so yes, if you guys have any question, just let me know. Okay. Okay, most of you guys know how we mark up a chart. Okay, so there's 1 hour here. Again, if you want to draw this trend line, okay, whatever is here, okay, or here, for me it's the same thing. Okay, guys, when we do trend lines, we're talking about the area of prices. Okay, so this is not wrong. Okay, but this is wrong. Okay, just if you have a very big week, so for example this week was here, of course you're not going to do it like this. Okay, you're going to do it like this. Okay, and now let's draw on lower time frame. And again, you guys can identify a lot of patterns here also. So if this is going to form something like this, we are going to look for the drop. If this is going to correct, we are going to look for it to go aggressively up. Okay, so let me show you guys with chart pattern. Okay, so if you get this type of thing, okay, you are going to expect for you to hold any buy, because market, you are reversing the trend, you are trying to go against something like this. Okay, this is good. Okay, if you don't get this, okay, and you get this, okay, you can get this. It's very common. We can get this, but then you get something. Say something like this. Okay, let me mirror this. So, and then you get something like this. Okay, that means, okay, drop is coming. I'm not telling you close your position, just make sure to move on break even. Okay, this can scale up like I already showed, but yes, this is not aggressive. Okay, and our job is to identify aggressive from corrective movements. Okay, guys. So okay, so guys, do you have any questions?
Marios, what time do you teach on IML?
So I teach every Sunday, okay, at 3 p.m. EST, okay, and every Tuesday and Thursday at 12 p.m. EST. Tuesday and Thursday are Greek sessions. I'm speaking my language, okay, but I'm drawing in the charts, okay, with a tool, okay, with not the tool that I use today, okay, with another tool that I can draw. Okay, so if you don't get it, if you join me on Greek sessions and you have a question, type the question in English, I will answer you in English. Okay, no problem.
Okay.
Hey, Mario, do you mind if we drop your Telegram link in here?
Yes, drop it. Actually, let me draw it, because I always keep changing.
Yeah, I do that too to keep spammers out.
Yes.
Maria says she learned a lot from this session. Thank you, Maria. Anybody that's not in his Telegram, he just dropped the link.
Okay, so guys, feel free to join the Telegram. I keep updates on my IML TV schedule and some setups. Okay, sometimes I will do free Zooms. They are also okay. I'm giving value to the people. I will update on the charts, and yes, I will keep you guys updated on the news, because I'm trying to, master the news. Okay, because especially if you're a swing trader, you need to understand fundamentals. So yes, yeah. So thank you guys for attending. Okay, it's 6 a.m. my time now, so I will get some rest.
I was going to ask you what time is it there. That was my next question.
Yes, it's 6 a.m. now, so I will get like a 3-4 hour rest. Okay, guys. So guys, trade safe, trade with care. I hope everyone had a profitable week, and everyone will have a very nice, good month and profitable weeks. Okay, we have ECB rates, we have Fed rate decision this month. It's a critical month. We will have big movement. Make sure to be on the right way in the market. Okay. If not, you stop loss. Okay. And always don't over leverage. Okay. So thank you guys. Okay. Thank you.
Thank you, Marios. Woo!
Bye-bye, guys. Bye-bye.
All right, everybody. That concludes the Forex part. Now we'll move into the chill part. So if anybody has any questions, anything you want to look at, we're just going to hang out for a few more minutes. Make sure everybody's good. If you're new to Forex and somebody invited you on here and you want to join our family or our team, get back to them. But right now we'll just do some hanging out, some Q&A. Does everybody see why Marios and I both were looking to sell this? This is I looked at my week, the software that I was covering earlier. Whenever you have your account linked, it'll show you the pips you caught for the week. I like that. I was up 1,090 pips for this week. I sold EN, I sold GN. I bought GN on the way up. I also sold silver. I caught this drop. I took profit, and after it pulled back, I got in and sold again, and I took profit down here because of these levels here. Silver is something that I don't hold long term. I know some people do, but right now the market is not really trending a lot. It's like a lot of sideways movement and consolidation. So I did sell this up here, got out. We called this in our team group for everyone to sell. We made some pretty good money off this. So does anybody have any questions about anything? You can unmute yourselves.
Yeah, I have one question.
Mhm.
You take over, cool, please.
I can barely hear you. Can you speak up?
Yes, can you go over gold?
Can I go over gold? I didn't sell it, but I will mark it up. I focused on silver this week. Silver actually pays better. And silver and gold correlate a lot, but like he was saying, sometimes a chart will drop and the other one, it might be a couple hours or the next day. I'll take that back. I did sell this here and I took profit here, but I didn't get into this. I didn't catch this initial drop, but because of these equal highs and these wicks, I did sell this today and I took profit down here when it started creating an equal low. But I'll mark it up from scratch the way that I mark up my charts. Some of you, if you haven't been on lately, the reason I started using the black and white candles is a mindset issue. We know that trading success is 90% mindset, and it's only 1 to 10% skill set. The other 10% is like skill set, risk management, patience, and discipline, things of that nature. So I want to show you before I used to trade with the red and green candles, but psychologically, when I see green, I'm going to think buy, buy, buy. When I see red, I'm going to think sell, sell, sell. Then you got red and green mixed together. You're going to get confused. So we're conditioned to think buy when we see green and red when we see sell. So to take that conditioning and to deprogram ourselves, a lot of us have started using the black and white candles on the gray background. So now all I focus on is the structure of the market, and that's what we're trading here is market structure. So I hope that makes sense to everybody. Just wanted you to understand why I'm using black and white. Jonathan, I'll go over the smart trader again at the end. I went over at the beginning, but I'll go over it again and tell you why I'm testing it out. Okay. For those of you who already know, we do top-down analysis. Top-down analysis means we start at the top, which is the highest time frame, the monthly, and work ourselves all the way down to our entry point, which for me is always 15 minutes down to 1 minute. So I can zero in and get those sniper entries. I don't know if you guys follow me, but sometimes I post my shots of my entries. So what I'm looking for is my most recent highs and lows of this market. For those of you who don't know how to identify swing highs and swing lows, you look for U-turns in the market. It made a U-turn here. It made a U-turn here. Since I'm dealing with the monthly, I can now consider this a U-turn because the month did finish today. Okay, when the market opens back up Sunday, we will get a new monthly candle for the month of September. So that's how you identify swing highs and swing lows. You look for U-turns in the market where the market made a big U-turn. Okay, so like this right here wouldn't be a big U-turn because we're still going down. All right, so I'm going to focus on my U-turns, my swing highs and swing lows. We got one there, and now we can count this one for our monthly. For my weekly, since it's so far away and this is such a big zone, let me clean this up a little bit. I could focus on this because this is probably going to bring me up to my daily. I'm not going to focus on it. Say that again.
If you don't mind, Gigi, while you're explaining how you're doing it, can you also touch on the reason why you're not working the wick so the rest of the family can understand why?
The reason I'm not using the wick on the higher time frames is because of fake outs where the market tries to trap people. I'm looking at these equal lows and equal highs where the market actually closed their orders. This is where the market makers, the institutional traders actually closed out. These were where they tried to push the market higher, but those orders did not get filled. These are unfilled orders or liquidity in the market. All right. So when we get to a lower time frame, if you want to clean it up, you can. Me, I like to focus on, you know, this was a wick. All of this was a wick. Now that we're down to the daily, when we were on the weekly, let's look at this. That was a wick. All right. So if you look at it right over here, you see that was a wick. Now when we go back to the daily, it's actually price action. But you see all these equal lows that were created. That's why I'm deciding to ignore this right here. That was just to close out previous liquidity and to trap people who were selling or people who were thinking it was going to get here and bounce back to the upside. All right. And the same here, if you look on the higher time frame, this was a wick, but now that we're down to the daily, it is candles. And again, I'm going to focus on these equal highs, this price that got respected. All right. Now for my daily, since this is a very volatile pair, I'm just going to focus on this zone right here. All right. I stopped using trend lines. I very seldom use them. If I were to use one, I would use it at this point. I wouldn't go all the way back here. Instead of using trend lines, now I go down to the 4 hour. And I focus on the key zones. Okay. I keep moving my tool. I'm going to focus on this area down here as my point of interest. And if I were to stretch this out left, you would see it just covers this area of consolidation or accumulation, as some people call it. And I will also, if you use your trend line, you can hold down the shift and it will give you a straight line. I'll focus on these equal highs. And where the market closed today, these equal lows. Friday and Saturday is a good time to mark up your charts because the weekly candle has completed, the daily, and as we saw today, the monthly had completed. So price is trapped in this area right here. I'm going to take this one here and stretch it out a little bit just to see how far it comes. Let's see, right there. So I'm just going to focus on this right here. Price pierced through here. but it didn't. It failed to close below these equal lows. So we could see it go back up and retest this high. Now you see how here it's showing that you got price action, but when you look on the higher time frame, which overrules the lower time frame, you got a lot of wicks going on down here. So even this right here on the higher time frame was a wick. If you want to, if you feel more comfortable, you can move this down. And I like to just test things out and bring it to the left just to see where it's going to take us, and voila. This right here is the only reason I will change my opinion about using this as an area of support now, because it fell to this exact same price level, which means that that's a very important price to the people that are, let's see, 15.18. So that looks like 15.19 is the price point that they were focused on right there. I'll make this 15.19 and see. Yeah. So 15.19 is sort of like the point of focus, the focal point for silver right now, or gold right now. All right. So yeah, it's already pushing up and making a flag pattern. We could see it come back up to here. If it pushes up, I would want to pay attention to this area right here. And as you see, I think that's the same area I had marked up before we started, but I want to see if it's going to hold here or if it's going to reject. If I get rejection again, I would enter the sell here. I would look for this as my next area of interest right here, because you got all of this right here is some people refer to it as unhealthy price action or imbalance in the market. Not my terminology, but I don't have a word to explain it except that you have an area of all buyers, and just like this here, you had to have sellers come in and fill their areas. This is the market makers or the institutional traders. This happened so fast that the people who had sell orders, they didn't get filled. It just rushed past it. And you need to see that area come in and get filled. All these areas you see right here, this was filling this candle right here. So you want to see some price action get filled here and all the way down to here. So I want to see it get here and then sell down. If it breaks through this, then I'll look to sell again from up here, because this unhealthy price action does need to get filled. All right, and that's my analysis on on gold. All right, any more questions?
Yes, I have a quick question. In regards to like take profit, are we looking at the top of the high of the candle to the next level, or are we looking at the low?
If I were looking to take profit on my sell, it would be within this range. Probably you see where this candle ended and this one started. That's like 1995, 1495, 1496. If I were looking to take profit, it would be about 1544 or 1545. They do like to get near this and either fall short to hit people's stop losses, their trailing stop loss, or go through here and activate people who had pending sell orders and then rush it up by 10 to 30 pips to hit their stop loss. Because people set a lot of pending orders, and that's why when you get around these key zones, pending orders will get activated and the stop loss hit, and then it will go your direction. Like here, people were looking to sell, they took it a little higher, people were looking to sell. This time they knew people were doing the same thing. I mean, third time's a charm, right? Well, this fourth time, they activated your sell order. Let's see how many pips they took it up. They took it up 50 pips. So if you had a sell order activated here, more than likely hit your stop loss. And then what did it do? And this is just something you'll see a lot in the market. It turned around and dropped almost 300 pips. So people were sitting here with sell orders ready to sell, and they probably got in too early. it hit their stop loss and then just ended up. So they have to take your money to make money. They have to close out orders in order to make money. And so that's what those tricky, you know what, did right there. People were looking to sell, looking to sell, looking to sell, looking to sell. They took your money and they sold.
So I have one more question in regards to what you just said. So what's a key way to avoid that? Like if we know that it's going to make a spike, are we waiting for like maybe like after the initial impulse, or are we waiting like a second or third candle, or like how can we avoid that?
If you go to a lower time frame, you had all candles to the upside. There was no rejection. That's why I said I analyze on a higher time frame. I enter on a lower. You can also, sometimes I'll use this. You got some divergence going on here, and when I see divergence, I won't enter until I see it cross over the MACD to the downside, which would have been, so people, I trade without indicators, but I will use them for confirmation on something like this, right there.
Crossover.
Yeah. But once I'm so used to them, I'm so used to this pattern that I would have anticipated it. So I would have waited this candle, it closed below that area. Or once it did this double top and this wick, I would have gotten in because I would have known that was their little fake out. Once you get used to trading this way, I was anticipating it really. It just came, it probably came up to about here. Let's see. Once you get used to their tricks, and if I pull the trigger prematurely, look at that. Boom. All right. Perfect. If I pull the trigger too early, then I'll just adjust my stop loss because I already know what it's going to do. And then I'll just get a better entry. One thing I have learned, if you get in too early and it pulls back, and I don't recommend this to anybody, it's because I've done it enough and it's always worked for me. I'll get a better entry here. And when it gets here, I'll close the other one out at break even and write it all the way down.
Thank you.
You're welcome. Let's see if this one did this. This one wasn't easier. This right here fell, and then it started pulling back against me, but then it ended up going my way. So I got in here, and when I saw the wicks, I closed out here. When it pulled back up into here, I sold again. I closed out here on part of it, and then the rest I let run. But before the market closed today, I did close. Because the market hasn't been trending, I've been closing a lot of my trades. But again, if you follow me, you see I did catch 300 on GBP, NZD. But a lot of my trades, I've either been closing out all of it or part of it because the market's just been crazy lately with everything going on with the trade wars. But I bought this up, I sold it down, I bought it up, and I sold it again, and it got on my nerves, but it finally dropped. Started dropping today. Whenever you get it in a channel like that and it's a pair that pays well and it's a good move of 100 or more pips, so that's how I was able to get 300 pips. I wrote it up and then I wrote it down. I caught this move first, and then I caught this move, and then I caught this move because it's in that channel. Back in the day, I would have got this and I would have just held that one trade. But now that I've learned to trade it both ways, now I sold, bought, sold, bought, sold. All right, let's see if I can see the questions here. All right, anybody else?
I have two questions.
Mm-hmm.
Did you say that you feel silver pays more than gold? And if you can show how you link the accounts to show your total pips.
All right. If you put a 0.10 on silver and it drops 1 pip, it's $5. It's very volatile. So if you have a 0.10, which is $1 a pip for most things, if it drops 10 pips on silver, it's $50 versus $5. So it pays $5 to the standard pip. Yeah, I'm reading the chat. Yes, I do set alerts. My entry is 15 minute down to 1 minute. And the moving averages, I usually use a 9 and a 50, but I found a whole moving average that changes colors, and I just was testing that. And I only use them when I'm looking for divergence. The only time I'll use the moving averages is to look for divergence, or if you use a higher time frame, the higher time frame MACD will tell you the overall trend. If you're familiar with the MACD, it moves with your chart. Like here was your next impulse, correction, continuation, correction, continuation. And now it's starting to come down. So if it gets back to this 0 line and starts to go back up, I'll know it's going to go back up. If you follow Stevenson Lindor and the way he teaches bounce back with the MACD, the 0 line is extremely important. On the higher time frame, the MACD gives you your overall trend. On the lower time frame, the MACD gives you entries for your flags. That's how you know when your flags or your corrections are over. You got an impulse here, correction, impulse, correction. And whenever it's playing around this right here, not moving at all, it's consolidation. You finally got this impulse, and you got divergence. Thank you, Jamie, for teaching me divergence. All right, and then when it broke this, you finally got that impulse to the downside, correction, and then you're getting some continuation. So you want to see if it rejects off there, you're going to see it go down again. All right. So that's why I use the MACD.
Hello, Gigi.
Mm-hmm.
Sorry, when you mentioned the higher time frame, are you talking about anything from 4 hour up?
Yes.
Okay,
I don't analyze lower than the 4 hour, but just like if you look at the MACD on the 4 hour, turn it back on here. You'll see it has had this in an uptrend, except for the small corrections. It was impulse, correction, impulse, correction. If you look at it on the daily, it didn't show it as an uptrend until like right here. Let's see. You can go and back test this by using verticals. It had the 0 crossover right here on the daily. So let's see what that looked like on the 4 hour. So on the 4 hour, you would have gotten in here, which would make a difference of, you could have got an extra 66, 67 pips. Then you got a correction. But if you waited on the daily for it to cross over, you caught 186 pips total before it reversed.
Hey, Guinevere.
Mm-hmm.
Right. As you're saying earlier on, concerning the moving average that changes color, I never found that on TradingView. I know how you do.
Let me make a correction on the daily. It went up 377 pips. Let me see if I can find the one that I used. Somebody had coded it, and I would have to search and rewrite it. It's like you write it as a script. Did I just add that? I think I just added it. Jamie, was it you that was able to find the whole moving average that changes colors?
Yeah.
Let's see.
Yeah, this is a whole. This put whole automatically.
This it right here. I'm just gonna put a weird number so I can see it. Okay.
And
Yeah,
just like
I had to Google to find it, and there was a code I had to copy and paste and write. And it takes some time. It wasn't anything that was easy to do. And I had to write like a whole script.
well, what I can do is I can put it in Discord. I'll take a picture.
We can't hear you, sweetie.
Oh, can you hear me now?
Yes.
Okay. What I'll do is I'll take a picture of it from TradingView and I'll put the photo in Discord in the chat.
All right.
Okay. Also, Gigi, if I could comment, I believe it was Maria that had a question about learning.
You sound like you're under the sea, sweetheart.
Okay, is this better?
That's way better.
I just hate to sound like I'm yelling, but I wanted to, I know Maria had posted a question in there. I wasn't sure if she saw it, but it's just not for her, but it's for everyone in the group. If you want to learn the flag patterns outside of marking up 25 to 30 pairs per day, per week, you can go to Dollar General and get you some index cards. Go to Google, print out the pictures, cut the pictures out, put the words of the flag patterns on the back, and then put the flag pattern on the front, and just quiz yourself. Make it a game, and do it every day. I mean, have it for your kids. I mean, that would just definitely be awesome if you would have your kids train you, because what's going to happen is they're going to learn it, and you're going to teach your eyes to see it. So that way, when you go on TradingView or MT4, whatever platform you use, you'll be able to see it and it'll jump out, because you're training your eyes, if you will, to see those flag patterns without even drawing it up.
Yeah, the only way you're going to learn them is to draw them out. Like that's flag pattern there. And your entry, when you're using a flag pattern, there's different ways to do it. If I can get it clean here. Y'all can tell it's ForexNChill. I'm on my couch with no mouse again. All right. Again, you're going to use your MACD in correlation with your flag pattern. And let's like this flag and bring this up. I think most people use the other MACD. Let me bring that one up. Use the one that people use the most. You'll notice your MACD moves in conjunction with the 9 and 50 EMA. So you want to see this pull into your MACD and reject and start going back down. So you'll probably see like this. I can see it one more time and then shoot to the downside. So let me see if I can find some that's played out. Everything's just been so choppy lately.
Quick question.
All right, okay, let me finish this and then I'll take it. I just want to show them about this flag pattern and the MACD. All right, this was an ascending flag pattern. And you see how your MACD pulled in, and then when your red crossed back over and it crossed over the MACD, that's when your flag was over. So you could have entered up here at the top of your flag, or you could enter it at the breakout to catch the continuation. That's how you use your MACD. And you see your moving averages will pull in together, then they'll separate. Just like here, they had pulled in together and they separated, and you got that rejection off here, and that was your continuation. You would have caught this whole thing right here. You would have lined up your EMAs. I say they hug or they kiss right here when they start separating, and it rejected off your zero line. You would have caught 118 pips. All right, now what was your question?
Do you wait for a candle to close before you enter or exit a trade?
Like right here, I wouldn't have It just depends on the circumstance. On the higher time frame, if I'm looking for a rejection off of the 1 hour, I will go down to the 15-minute, wait till close of the 15-minute. I don't wait for a whole hour. I start looking at the lower time frames. Like, here's another one. This right here. You see right here where your EMAs were twisting, that's your consolidation, your flag pattern being made. Your EMAs start breaking up there, and you get the crossover of your MACD, and it goes to the downside. So again, this is choppy right now, but all right, like here's a perfect flag to show this. You got this flag going on here, and I know I'm not drawing these perfect tonight. Again, I'm sitting on my couch, and you look, you had the red one on top to let me know it was going down, and when it crossed over here, my flag was over. When they twisted here at the bottom, you could have got an early entry. You see that twist lines up with these equal lows and these wicks. If you had gotten in here, I would have gotten in there. That was 96 pips up. So this is your impulse going up. This is your correction going down. And you see when your impulse was going up, your blue or your buy was on top. When it twisted and the orange went on top, you started getting your flag. When it twisted and the blue went back on top here, it pushed back up. So you could have bought in here. Your stop loss would go, I always put it right below. And then it took off. So if you entered here, you still would have needed to put your stop loss down here. If not, you see right here, you would have gotten taken out. So if you enter at the breakout of the flag, you still need to put your stop loss down here. All right, so let's see. We slap the MACD on that, what we would get. Not the MACD, the Fibonacci. Okay. This is your first impulse correction. It came down to your 78, and then it took off again. You can also use the Fibonacci to know when flags are over. There's your impulse correction. It hit your 50. When it rejected off your 50 and started throwing wicks, you could have got an entry there. And then here's another impulse correction. And when it started bouncing off, see, these are multiple ways. Not only did I have my MACD flag pattern, but now I got all this rejection off the 61.8. So this is my key to buy. That makes sense? When I love the Fibonacci more than anything else. I can trade straight Fibonacci and not need anything else.
Hello, Gigi.
Hello.
Hello, Gigi. Please, could you repeat these entries levels Fibonacci?
The most important Fibonacci levels are 38, 51, and 61.8. When you have a flag that is going sideways, 9 out of 10, you're going to get a bounce off the 23 or 38. When you have a flag that is going down like this, 9 out of 10, you're going to get an entry off the 50 or the 61.8. Right here, when you kept seeing it reject at this 61.8, you could have entered and caught this whole move. That's why I like Fibonacci, because those levels act as support and resistance. All right, let's see. Here is another. If this is a news fake out, sometimes I'll ignore that wick. But you're not wrong if you use it. But this was definitely a news fake out. And then you had those equal lows, so I would have probably ignored it. It broke just slightly above, but you got a wick and a rejection. Came here, rejected 61.8 again. You could have entered there for the sell continuation. Let's see how it lines up with the EMAs. The EMAs crossed here, but see with the MACD, you could have gotten, I mean the Fibonacci, you could have gotten an earlier entry. Right. So if I do use the Fibonacci a lot. I'll use it more than I'll use EMAs. I rarely use the EMAs, but I will use the MACD a lot, or just to see if there's divergence. Divergence usually comes into play around key zones. So let's just look and see if we see. Let's see. We got a reversal here. So let's go. That is August 9th. Let's go to the 15-minute. And see if we had divergence before it reversed. Gosh, this thing's getting on my nerves tonight. All right. And yes, we had divergence. I think we have divergence, Jamie. Sometimes I just can't see it, but yeah.
Yeah, that's divergence.
Yeah, that's divergence. And
Definitely
so,
big divergence.
yeah, you got divergence going on down here. And me, when I see divergence, I usually enter at the zero crossing. And if you wait for that zero crossing, you usually don't have any drawdown. So now let's see. That entry would have been, that's why I like to find divergence right here. When you had your zero crossover, let's go back to the 4-hour so we can see that and see what we would have caught so far. Yeah, we would have entered here. We would be up 269 pips. See, you don't need any indicators. Don't need indicators, guys. Except for that MACD, that was sweet. Even this right here was divergence. So, but yeah, that was a good move using divergence. And now that we got the divergence and we're in here, let's look at the Fibonacci. Here's this right here. 61.8, you could have got an entry right there and caught 42 pips. If you had a trailing stop loss or you saw that rejection off the 23, you could have got out. Here you had another rejection off the 61.8 and you could have caught 163, 181, 202 pips. All right, just off the Fibonacci. Fibonacci can be used for retracement and extension. Let's see, right here. Right here, it hit your 50. If you got in off the rejection of the 50, you could have got 96 pips. It pulled back down to your 38. Look how many times it rejected there. You could have got 96 pips.
And you had divergence there also.
99, yep. Got divergence also. Look at that divergence. So Fibonacci is a great tool, guys. If you don't know Fibonacci, watch a few training videos on it. I haven't taught it in a long time. I taught it to my team last night, just to show you. If you use the harmonic scanner, if I can talk right, I think it's the milkshake. So you got impulse is your 0 down to 100, and then you would get correction. Wait, why did I just draw this backwards? All right, let me turn this around. I must have the reverse on. I probably had the reverse checked on my oh, I know what it is. I'm using that Fibonacci we were playing with last night. That's why I'm lost. Right here. Let me go back to my That's what I'm sitting here like, why is my Fibonacci not looking right? This is it. There we go. All right. Now it's right. When you hear people talk about ABCD patterns, that's Fibonacci. Your impulse is your AB. That's
Hey,
A.
BJ, can you mute yourself, please?
Who's that?
BJ.
Hold on. I'll mute everybody. Then you can unmute if you have questions. All right, everybody's muted. Fibonacci, your A to your B is your impulse. C is your where your correction stops, and D is your extension or your continuation. All right. When you hear people talk about ABCD patterns, that's what they're based off of, A, B, C, D. Now, once A, B, C happens, you can get rid of the A and B, and now C becomes your A. So this would be like A, B, C, and then your next extension would be your D. All right. So that's how you use Fibonacci. Fibonacci is nothing but support and resistance levels. If you use it on a daily, you can use it for like supply and demand zones. Let's draw it on the daily. From here all the way down to here. And look at that. Look how this hit that 23. We covered this last night. That's why I'm thinking this could come down again. Right here. I think we could see this. Do that. And then that. If it doesn't, it could go up. Do something like that. This is your 50 level. So watch it at this level. It's at an important level on the daily. It has not taken out the previous swing highs. So yeah, I think we're going to get a rejection and retest the bottom. We could get the bottom retested and then go up. I'll do that one more time. Take this to the high, to the current low. Take off all this stuff. And now let's look at it on the 4-hour. All right, let's see what I did last night. Did I use this high last night? All right, one thing you can do to get if you don't know how to draw supply and demand levels or support and resistance, you can do your key levels, your 61.8, your 50, your 38, your 23, and that. All right, now let's take this off. Oops. Let's take our Fibonacci off and go down to our 4-hour and refresh. And look how these levels get respected. All right. This is your 23. This is your 38. You can come in, tighten it up just a little bit. This is your 50. And this is your 61.8. And that's all from drawing a Fibonacci. All right. Oh gosh, there's 23 things in the chat. Oh, okay. Thank you guys for answering the questions. Stephanie, what are you not understanding? You can unmute yourself. I think you're not understanding divergence. I'll show it the best way I can. All right, if your candles are going up, Then your MACD should be doing what we said, up, up. And this is showing the price is still going up, but your MACD would be doing the opposite. When that MACD crossed, then this happened. So you have price going up there, but you had the MACD going here. And when MACD crossed that 0 line, you got, so it's like your volume is showing you that the market is getting ready to pull down, but the candles are still going to the upside. They're doing the opposite of each other. That's divergence. Volume is going down, but the candles were still going up. Volume is going down, but the candles are still going up. All right, and it would be the opposite in a sell. In a sell, you got price going down. Price is telling you I'm in a downtrend. Okay. MACD is agreeing. But on this one, it starts going up. So this is going up and this is going down. That means you're getting ready to see a reversal. It probably would help if I did like the MACD has a 0 line. Let's act like this is the 0 line right here. So if I'm in an uptrend, it's going up, correction, up, correction, up, and starting to go down. It's going to cross over. Now I'm going to sell. All right. Price was doing up, correction, up, correction. It was still going up. And this was going down. When this crossed, then you got down, correction, down, correction. That makes sense?
Yeah. So in correlation with divergence, are we looking at the ABC patterns at the start of a new trend?
No. When I'm looking for divergence, I'm just looking for reversal. Jamie's the one taught me divergence. I heard people talk about it forever, and I heard people talk about it works. And then every time I would talk to Jamie, divergence, baby. What? Eagle eyes, eagle eyes. And I'm like, what is this fool talking about? So then I started paying attention, and there are people who trade and they won't enter a trade without seeing divergence. Like right here, you got a descending channel. Price is going down correctively, which is a reversal pattern. That in itself is a reversal pattern, right? So I'll bet you if we turn on the MACD, because a lot of times when you see a descending or ascending channel, you see divergence too.
Okay.
Yep. See, look at this. You see right here where price, the MACD was going up. And when it crossed, you got your breakout. Price was going down. MACD was going up. The MACD is telling me the buyers are closing positions, but the candles, this is telling me the sellers are closing position or they're losing momentum, but the candles are still going down. And see, this is on a higher time frame. So it probably happened on a smaller time frame first. But just with that, you could have caught 210 pips.
Wow.
And you could have caught it sooner on a lower time frame, I'm sure. Like right here's divergence. You see divergence on every time frame. This is going down, and this was just going sideways. So then we had like a little, that was probably news. So we could still see this. I think this is going to hit here. You know what? That divergence right there, that's all it's going to give us because it was on the 15-minute. It gave you that little correction, which came here to these equal highs, and then it sold off. So remember I was saying you could look at equal highs to enter. This, even though it's not exactly the same, you got these right here. You could have sold here. This was your confirmation to sell because this was just a little correction off of this divergence and it crossed back over. So we could have entered that because we're still in the overall down frame and got 75 pips. So sometimes I'll scalp off that. I call anything 50 to 100 pips is like a scalp.
And also, Gigi, just to add on to that, anytime you see a higher time frame, 1 hour, 4 hour divergence, you go down to the 15 or 5 minute to see either a descending channel or inverted head and shoulders. That way you can find your pretty much your perfect entry.
Yeah. There's just so many ways to trap the market. Once you learn these patterns, it's like you catch so many moves. Like this right here, like you said, probably had some stuff going on at the bottom before it took off. Looking right there at the bottom, that's where that 4 hour divergence was. You could have caught this first impulse correction. And if you pay attention to this flag, let's see what we got going on here. Right here where it crossed, you would have caught this whole. Boom. $87 pips.
Yeah, that was nice.
That's how I catch a lot of breakouts. These breakouts aren't always news. It's just where you got divergence going on in the market and it's at a key reversal zone. And especially you see a lot of wicks going on. You got a lot of accumulation going on there.
Yep.
Can you repeat what you just said? You said something about going to the smaller time frame, the gentleman that was just speaking, and you're looking for an inverted head and shoulders. I didn't quite catch what you said.
Basically, if you see divergence on a 1 hour and 4 hour time frame, just know that's going to take a while for it to play catch up. But you want to go down to your 15-minute, 10-minute, or 5-minute so you can find your entry. You'll always see a descending channel or an inverted head and shoulders pattern form. If you see that, you can do two things. You can wait for the move to play out, as Stevenson and Gigi and all these great traders do. They wait for the impulse to happen, and then they catch the continuation after the correction. So you can take the sniper move, or you can wait for the continuation. But as you can see here, that's an inverted head and shoulders. Once that thing dropped its right arm, that right shoulder, that was game over. You let it ride, snatch out about 80, 100 pip move, take your money, go home and go have a good time with your family the rest of the day. Don't need to give the market back your money. Or at least close 50 to 90% of your trade and let the rest run because it's on a higher time frame. So it's on a higher time frame. That's money in the bank.
And you also got the impulse correction, and you can catch that continuation right there. There's so many confirmations. One of the most important things you should have are confirmations. You need a checklist of confirmations before you enter a trade. Don't just enter it because it looks good on paper. You need, like he said, the guys are saying get index cards, write out your trade confirmations and stick them beside your computer or whatever you trade. Like me, I would have been like, it's at I'm sure that if we mark this up, it's at a demand zone. I got divergence, I got an inverted head and shoulder, I got a impulse correction. If I turn these on, I got a cross of the zero. For those of you who use trend lines, I'm sure this right here, you would have got it later, but it broke the trend line and retested it. So you could have caught the second part here. So you had already had an impulse, correction, continuation, retest. If you missed those first two, you could have caught this third one. and still caught 60 pips. A lot of people are very happy with 60 pips. I know people that trade one trade a day, anywhere from 20 to 50 pips, and make six figures off one trade a day. There's one of my friends. He takes one trade a day using a couple standards, get 30 to 50 pips, and that's it. Yep. Back testing is the only reason I was able to turn my trading around. Back testing, back testing, back testing, especially if you lose. If you lose a trade, back test. Before you pull the trigger, you should know what your take profit and your stop loss is going to be. Don't get in a trade and not know where you think it's going or where it could possibly go. This right here looks like it's getting ready to go back up because you got a little descending channel going on right there. You got this right here. And it looks like it's getting ready to go back up. Oh, so I'm getting ready to do 1 hour. Yep, you got divergence. So it'll probably push back up. I still think it could push up and then go to the bottom before it completely breaks that. Yeah. You got divergence on the 1 hour. So it'll probably push back up one more time. Like I said, I quit using trend lines, but I started looking at support a lot. Support and resistance areas. This going back here and here. That candle right there, right back to that area.
Yep. Springboard right on that. Yep.
Yeah, it's going to go back up to here at least.
Yeah. How many pips is that, Gigi?
Hmm.
How many pips is that?
Hold on. I'm getting ready to. Impulse correction, continuation correction, continuation correction, continuation, reversed. I'm going to go back up. Like if it goes to here, well, that's not my. To here's 39, 63, 77. If it gets back to here, right there.
Perfect.
Yeah.
Yeah, that section right there. Oh yeah. Oh yeah, that's gonna be real nice.
Let's see. If it comes back up to here, it'll probably come to like right there.
Yeah.
In that zone. And then if I get rejection, I'll sell it from up here. It's crazy how I don't even mark up charts anymore. I need to. I promised myself I was gonna start marking up again because I've just been making so much money just trading like this lately. I've been like, shoot, I look at the monthly, weekly, and daily, get my overall trend. Because if you look at this on the monthly, there's nothing says, look, I just deleted my alert. Nothing says buy me. Nothing says buy me. Nothing says buy me yet. We got one aggressive push up, but it's already come back. So only thing I'm interested in right now, the sales, until I see a clear reversal. And like the weekly ended. So I think we could see it maybe come back down and then shoot up. Because there's really nothing aggressive there. Let's see. Even though this was aggressive, it still didn't reverse it because it didn't take out this previous high. Look at that. That previous high didn't get taken out. Oops. Look at that. Man, that would be sweet to catch it up to there, though, wouldn't it? Let's see what this is. Got this. Hasn't been. It got close to that. Yeah. It's going.
Yeah.
It needs to come down to here.
One more tag. Off to the races.
We need to get this.
Uh-huh.
Then we can see this.
Yep. Go there, retest. Bam.
This.
Keep going.
This.
Yep. Perfect. That's perfect. I hope y'all taking a screenshot of this.
I think that's what we'll see, something like that.
Money in the bank.
Yeah. Got all this liquidity up here that needs to be taken out. All of these wickage. We got wickage. A new word. We got wickage. All of that needs to be cleared out. Honestly, all of this needs to be cleared out. Look at that. This empty space needs to be filled. This empty space needs to be filled. Right there. All of that is liquidity. Every single bit of that. How many pips we got in there? It's just waiting for Brexit. Just from here to up to there. 745 pips. All I can say is, come on, baby, kick them day. Wait, we're still recording. Oh, yeah. All right.
Hey, Gigi, can you post that in the chat?
Yeah.
Nobody better not say Gigi didn't give y'all nothing, because she just gave you guys a money maker.
And this is long term. This ain't going to happen in a week unless Brexit comes out and pushes it up.
Thank you, Gigi.
Yeah, this is off the weekly, so it'll take it some time to play out. So first thing I'm looking for is it to push up, maybe back up to here and then sell off because you got this divergence going on. Maybe go up here and then drop. Because another reason, let's see. This was just a big flag. Price was moving correctively. Right there. Let's look at that one. Yeah. So I'll show y'all, like, when people talk about flags and stuff and corrections, the weekly is going to always overrule the daily. And so if you want to use a trend line and you want to trap that weekly, gosh, ForexNChill from a couch with no mouse. I always do this. Always get messed up. All right, let's just focus on this high to here. Every single one of these dailies that look like an uptrend on a lower time frame was just a correction. All right, so let's see what that looks like on the daily. Yeah, they were just flags. And so that's why I think this is still just a flag. Don't have anything aggressive yet. Those were just flags. That was one white candle on the weekly. Let's mark them off here. Let's see. So even though on the daily, everybody's like, oh, it's on an uptrend. You better look at the weekly. Well, the weekly saying, no, I ain't. Unless something happens with Brexit. All right, now let's look at that on the weekly. Look at that. It's flags. Do them like this. See if I can clean them up. This was actually like a channel. We could do it like that. Did this one like that? Now let's see how it looks. Yep, it's just a flag on the weekly. Isn't that crazy? How one time frame's telling you buy, the other one's telling you to sell. All right, anybody else got any questions? It is midnight, so we're gonna call it a night. Anybody got any questions? Everybody good?
Thank y'all so much.
Can I see what you
You're
have?
welcome.
Thank you, Gigi.
You're welcome. Was somebody saying something or asking a question?
Yeah, I was asking if I could see what you have for AU.
If you could do what?
What do you have for AU?
Oh, AUD, USD. It's going to take the dollar dropping for this to do anything, because AUD, their interest rate is so low right now. You see how much farther it can come down? It could come down another 706 pips. There's nothing saying buy AUD right now. Look at the daily. Nothing yet. You still got all these wicks down here. 48 pips there. Yeah, there's nothing saying buy it yet. You see all this that they could come back and retest? It's in a definite downtrend. Look at that. Let me do something here. I just want to use, I won't have to get rid of my markup I had. All right, now this one here. Got monthly, weekly. This was our last impulse correction. Up to the 38 on the weekly. And then went down. It's in a definite downtrend. I mean, there's no reason to buy it at yet, unless they get like an increase in their interest rate or something happens to the dollar. This pulled down to 38, extended, and then it went on a downtrend. It's been on a downtrend ever since. You are getting a descending channel on a higher time frame. It's long do a reversal, but if you look at Euro USD, look at that. Doing the same thing. The dollar has been strong for a long time. Oh, let's see if my, oh boy, it almost made it. I thought it was going to push it up there today. I was expecting this to finally break out of here and push up, but it came out last night when I drew this. This hadn't happened. So let's go back to the daily and see replay. When we did this last night, this hadn't happened. And let's go. All right, y'all remember this from last night, our Zoom? And I drew this zone, and I said news would probably push the dollar up there today. So let's see what happened. I'm glad I got that recorded. I got proof. I drew that blue thing last night, and I said the dollar would come up to there. Look at that. You remember that, Grant? I think, are you the only one on here that was on there last night?
More than likely.
Yeah. Remember we drew that last night on our session? Yeah.
Pretty powerful.
I saw it too.
Oh, Hey, is that Matt?
Yes, ma'am.
Yes, so you were on here when we drew that last night. We said that's where the dollar would come today. Stopped on it dead on, man. That equal high. I'm sitting here pointing at the computer like y'all can see me. This equal high right here. And what did it do? It faked out and came back. That's crazy. We covered that last night. It played out just like we had on our session.
Hello, Gigi.
Hi.
Sorry, I've been noticing a particular trend, particularly tonight's session. It's like there's something more about this equal high. Each
You
time
have
I
a
see,
lot of wind blowing in your microphone. Can you cover your microphone with your hand? Cover like the mouthpiece on your phone with your hand so the wind can't blow in it.
can you hear me now?
Yes.
Yeah, I have been noticing a particular trend, particularly tonight's session. It's like there's more to this equal high.
There's more to the equal high? Is that what you're saying?
Yes, each time it gets there, it drops. Each time it gets there, it drops.
Yeah, that's why it's called an equal high.
Oh, thank you.
Yeah, that just means it's a very important price to the people, just like people that flip real estate, people flip money the same way. They look for certain price points in the market that they want to buy or sell at. They don't look at charts. They don't look at trend lines, Fibonacci's, moving averages. They look at price. They're like, hey, when the dollar gets to 99 cents, I'm looking to sell. And they'll have pending orders. And when these people, they quit buying, these people are probably saying, I'm going to buy the dollar until it gets to 99 cents. And they got people already sitting there waiting to sell at that price. So it's just, that's where people like to deal. The people who control the movement, I won't say control, the people whose money is big enough to move the market, they have a certain value in their mind that they want to buy or sell a currency at, that they're willing to do business at. They're willing to sell it or buy it at a certain price. And they already have pending orders at those prices. And that's why sometimes when you see price get to a certain range, it will all of a sudden drop because somebody's got a couple billion. Like we looked at some trades last night where somebody had 1.9 billion pending for one order. And I'm talking about billion, one bank was trying to exchange 1.9 billion euro for USD at a certain price. So those orders are already sitting there waiting to be filled at this area. That's why you'll see it hit it and stop like somebody ran into a brick wall. All right, anybody else got anything else before we end tonight?
How's Mahogany doing? We haven't heard from her in a while.
How is who doing?
Mahogany.
Oh, she's doing great. She's been studying for her real estate because I talked to her yesterday. So she invests in real estate and like oil mines and other things too. And she said she was studying for that exam, and real estate exam is not easy. So she had to focus some of her time on that, but she'll be back with us. I'll tell her you were asking about her.
Yeah, that's what's up. Thank you.
You're welcome. We like to see people succeed in and outside of Forex.
Gigi, do you feel like drawing up US 30?
Okay, we'll do that one and then we'll call it a night.
Okay.
We covered this one last night, and we just looked at certain price points. Again, the US 30, because it is in indices, they like to deal at even numbers like 26,000. Here you got 26,340, or was the whatever. I can't see tonight. 26,390, but they deal like in the quarters numbers, 27.3, 25. So we just drew like the support and resistance levels, and you see how it meets those. I draw them on a higher time frame, and I enter on a lower. But you see, even though you had an impulse, you didn't have a correction. You had a retest of those equal highs, and then it sold off. Same thing here. It retested those highs, sold off, retested, sold off, retested, sold off. Finally come around, retested, sold off. Retested, take this out. Now if it uses this as support, it could go up from there to your next level. You see how it rejected, sold, rejected, sold, rejected, sold. Now it didn't reject this time. So we can focus right here to see if it's going to bounce to the next area. And this would be the price range for the next area. If it comes back under it, we could see it sell down to here. Sorry, this is grandchildren. 1 second. All right, they're on the West Coast, so it's still early there. But yeah, I use levels with the US 30. Now you can see patterns on it just like you do everything else, and you can use the EMAs and you can use the MACD. You see here, it had it in a downtrend. This was just a correction, but now it has actually crossed over. So if you see it come back into that MACD, and this time go back up, you could see it bounce to that next level. But I mark it up naked like everything else, and I do my levels on the lower time frame on this one. Okay, I went through and just marked the previous levels just in case. You see how it used this as support, 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 and just like we're seeing now here, where it had bounced through it, this time it closed above and continued up. Now it's using this same area, and this is an area where we had a strong buy the last time. Here, if you look at the Fibonacci, it's bouncing off your 50. So it keeps hitting the 50, dropping, 50, dropping, 50. You do have a wick to the upside on the daily, which could give us another drop. Because remember, on the higher time frame, the wick indicates that it was a fake out. You're going to see the actual price action on the lower time frame. But on the higher time frame, it didn't close above this previous high. So that would be a stronger indication we could see one more drop. But everything has to start on the bottom before it makes its way to the top. But at the close of the daily, it was just a wick. Let's see how the weekly looked. The weekly did close above the previous week. You see that? Looking left. Let's zoom in. So this could be your impulse, correction, continuation. Impulse, correction. We take off that MACD, Fibonacci on the lower time frame here. So that was bouncing near the 71. Let me include the wick and see if it, sometimes I'll play with it with and without the wick and see if it makes a difference. Now it's exactly at the 61.8 if I included the wick. You see how this hit the 61.8 on the weekly, 61.8 on the weekly. So it looks like this could be your impulse, correction, giving you a continuation. That makes sense?
Yes.
Because the weekly is stronger than the daily. And now looking at the weekly, you do have an engulfing candle, which gave us the impulse, the correction, it didn't take out your previous low. This is your previous swing low. And it did reject out the 61.8 2 weeks in a row. Could give us a pushback to the upside. Emily, are you a part of IML? I'm not trying to sign you up or anything, just asking. Okay, you can watch the bounce back training by Stevenson Lindor or Stevenson Lindor on Sundays. He teaches a lot about using the MACD. That's his, I call it the Mac Daddy. Because it's a really powerful tool.
And Gigi, the US 30, it's $5 per pip, literally.
Now that was silver I was talking about. Like if you trade a 0.10, 1 pip will put you like $5 in drawdown.
Wow. Okay.
10 pips. I traded, I twin traded. I opened a bigger and a smaller, and my 0.10 off of 10 pips was like $50, but I held it for like 30 pips. So like 30 pips off of a 0.10 is like $150, I think. It moves different than gold. It not moves different, it pays different than gold.
Okay. So you got to have enough in the account to cover that drawdown.
Yeah, if you trade gold at like a 0.10, trade silver at like a 0.05. Or if you put a standard on gold, put a 0.50 or smaller on silver. So yeah, silver moves good and it pays good. Just don't over leverage.
Okay.
Thank you, Gigi.
You're welcome. All right, everybody. Everybody out in Florida, please be safe.
Thank you, Gigi. Awesome class.
Thank you. One of my friends, he's in
Thank
Florida.
you, Gigi.
Grant, I know you were in Florida. Like, see it right here.
Yeah, we're holding it down.
Yeah, my friend Rob, he was out there shopping a few minutes ago. If anybody went to the US 30 boot camp like the week before, I had called this one here when it rejected off here. I told him when it rejected to buy it up to this next extension, and it played out based off the Fibonacci. So this was like your impulse, correction, continuation, correction, continuation, and I would start looking to sell back up here again once it pushes up there. Yeah, that's a good strong weekly candle. So, but just remember, everything has to correct. So it could pull back down to about here before it goes back up. Just if you're going to trade it, just be careful. As always, if you have FX Choice or LQDFX, you can trade US 30 with the larger lot size, and it won't blow your account until you learn how it moves. Okay.
Okay, great. Thank you.
And Stephanie, the quarters theory it's easy to understand. Just think about how quarters make a dollar. It's usually like the 20, 40, 60, 80 or 25, 50, and 75 because bankers deal in even numbers and like 20, 40, 60, and 80 instead of 37, 43, 52. You'll see the market turn around a lot at those areas. All right. What does Bell teach? I think he teaches volume. I haven't seen any of his. Oh, on quarters theory. Okay. All right. I've seen some of his stuff, just not a lot. I like market structure, and I learn a little bit about other stuff to complement what I already know. So I follow Stevenson, and when I started following him, I just focused on market structure. And I don't like, well, until I solidified my skills, I don't like following a lot of people, not because they're not good, but because it's like trying to learn French, Spanish, and Greek and German all at one time. You're going to get confused. If you're trying to learn a strategy, stick to that strategy. You know, a lot of people say that they're jack of all trades, master of none in Forex. You need to master something before you move on to something else. If not, you're going to get confused You're going to get frustrated. You're going to have blurred vision. Like when you're looking at the market, you're going to be like, am I looking at market structure, or am I looking at support and resistance, or am I looking at the Elliott wave, or am I looking at Wyckoff? And you're just going to get confused. So whatever you do, find one trading strategy and perfect it before you, like this jumping around from chat to chat, group to group, chart to chart. You're gonna get confused. And that's why when I started learning market structure, I stuck with it and I tuned everything and everybody else out. I used to watch Stevenson Lindor mark up. I would go to the recordings, pause, play, pause, play, pause, play, and I would duplicate what I was learning. Mario's teaches a lot like him. So whoever makes sense to you, follow them and tune everyone else out. Whether it's Oren, whether it's Bell, whether it's Losado, Stevenson, or Mario's, if they make sense to you, watch them until you perfect what they are teaching. And if you watch someone else, let it be someone else who trades the same way they teach before you move on to someone else, because you're just going to confuse yourself. Okay? Perfect it to the point to where nothing else can confuse you, and then add from other people to complement it or add to it. All right? And so that's why I started learning and teaching basic market structure, because it's so easy to understand. You didn't need any indicators. You didn't need anything fancy to learn how to count to numbers, 1, 2, 3, 4, 5, A, B, C, D, E, F, G. All you needed to know was impulse, correction, continuation, correction, continuation. Where's that going to get me? It's going to get me up to my supply zone. What happens when you normally get to a supply zone? You start looking for sales. So you start looking for a rejection pattern, maybe a head and shoulders or a triple top. Then you're going to get that impulse, correction, impulse, correction, impulse. You're getting lower highs and lower lows. What am I looking for now? If I look left, what happened the last time I was here? I started looking for buyers in this market. All right. If I got that reversal pattern, great. I'm going to buy back up. But if it hit this and then retested this, I'm looking to sell down to what? My next area of sellers. My next area of buyers looking left. And that's how market structure really is. If you learn to pay attention to your zones and your patterns, it's hard to lose using market structure. Just always know where you are in the market. Yep, ICE, impulse, correction, extension. If I get to this zone and reject, and I know my zones, I know I'm good to sell until I get back down to here. When it gets to here, I don't just automatically buy. I have to wait to see if it's going to bounce off of this and continue up. If it breaks through it, I don't sell unless I see a correction, because this could have broke through this but not giving me a correction. It could have went back up here and gave me a support right here and took me back up. So once you know that you're in a solid trend going down, keep selling until you get something telling you it's time to buy. And that's all market structure is. It can be that simple. I know people who, they'll talk trash about, oh, you use trend lines, blah, 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 blah. Well, guess what? If I had sold this trend line until it broke, that's 11,385 pips. Yeah, it's on the weekly, but that's a lot of pips. And then here, even though it broke, all we did was get sideways consolidation. But you could have bought at the bottom each time. Finally got that. It was 1,200 pips each time. It hit that and bounced up. You could have sold it 1,200, 1,200. I mean, when you see something in a channel on a higher time frame, milk it. The most money I ever made one week, well, for a series of weeks, GCAD was in a channel. And for months, 600, 600, 600, 600, 600, 600. Those trend lines were making me 600 pips each way almost every week. So that's my little sermon for tonight. My brother became a six-figure trader using a trend line on the higher time frames and just swing trading. He held one USD JPY for 4 months and stacked it all the way up. See if I can find it. That was the trade. That was the pair that basically made him a six-figure trader. He was on the weekly. Let's see. Like this, for example. Let's just say you bought this. And each time you got a correction on a lower time frame, you bought in again. You could have bought in down here and been a buyer for 3 years almost, 4,605 pips. But you're buying all the way up. By this time, you've probably got 100 positions open. I'm sure you've closed some of them, but I mean, you could have just traded this thing up for 3 years. For 3 years, it went up. There's nothing on here telling you to sell it for 3 years straight. Look at all your GBP pairs. You could have sold this from here all the way down to here and just been a seller the whole time. And that was from 2017 to 2017. And how many pips were there? 8,400 pips in a year and a half. Stacking that, you got about 30,000 pips. I can take 1,000 pip trade and make 3,000 pips, 4,000 pips off that one shot. You can take a 1,000 pip trade and make 4,000 pips easy with just 4 positions. You catch something on a higher time frame that's in a trend and you just milk it. Okay. All right. So don't let other people intimidate you or make you feel bad about what makes sense to you. You know, people might say, "Oh, you use this or you use that." If it's making you money, you use it. Like if I'm gonna sell this every time it comes up here, and I'm gonna buy it every time it's at the bottom, I'm making money. I'm in a channel. All right. So that's my mindset. If you see it, you trade it. Don't worry about what somebody else sees, because some people see apples and some see oranges. So what makes sense to you and what makes money for you, you stick to it and you be confident in your skill set. Don't worry about somebody else's trade account. Worry about yours and do what's best for you. All right, we will see y'all next Friday night. What pair do I think is good, Emily? I trade mostly GBP pairs. And this one right here is the one that paid me this week. I didn't even know that's the one I was on, but this is the one I've been trading this week. It's one of my favorite pairs. The first pair that I ever caught 400 pips on was GCAD. I opened a trade on GCAD on a Thursday. And when the market opened on Sunday, I was up 400 pips. I was so excited because I had never caught 400 pips. I closed it and it dropped a whole other 100 pips within an hour. I'm like, why didn't I just hold my trade? But, you know, I was still learning, always a student. So GBP pairs pay very well. GBP pairs are pay. All right, look at this on the daily. What do y'all think I'm expecting to do with this bad boy?
So.
Yes, baby. Look at that. Look where we are. 61.8. We pull this down with the 71. All right. Which I like the 71. So I wish I had held my sell because I was in from up here, but I wanted to make a withdrawal this week. I closed out all my trades. So I'm going to look at this area right here as my next resistance area. All right. So it'll probably open to the downside Sunday, and then I'm going to be mad at myself because one Sunday when the market opened and the gaps hit I went from having $5 profit to over $300 profit in like 5 seconds. I'm gonna be mad if this opens to the downside Sunday for closing it, but I'll wait for the correction. So y'all have a good weekend. Get your charts marked up and get ready for next week. Y'all be blessed if you're in the eye of the storm or in the storm's path. We pray for your protection. Y'all have a good night.
You too.
Thank you. Good night.
Good night.
Good night.